Hello folks, welcome back to another Smart Simple Savings. And we have had a week. We're going to cover CPI numbers that came out this week. We're just going to talk about the housing markets. We're going to even talk about Social Security forecast that came out for next year. And we're going to talk about what the markets did this week. And at the end, we're going to talk about, with all that information, what do we do going forward? As if we're trying to be the smart, simple savers we want to be, where do we go from there? So let's jump into it. All right, here we go. CPI for this week came in at 8.3, which was forecasted for about 8.1, and that's for August, and for July it was sitting at 8.5. So even though we came down, we didn't come down as far as we hoped. So we saw the markets crash on Tuesday when these numbers came out. Now, if you looked in the core details of those numbers, almost every category went up. Some big movers were food. We saw shelter, medical expenses, everything was up. What kept this down was energy cost. And what's caused energy cost down is gasoline and the Federal Reserve, or the government pulling from our federal oil reserves to keep and drive those prices down from where they were a few months ago. The problem now is we're looking at that Federal Oil Reserve is at a lowest point we've seen in 40 years, and now they're having to buy oil to replenish those reserves. So the one thing that kept this from being worse than it was is now going to have to go up, because now not only are all of us buying oil for all of our energy costs and for our gas, the government is buying it as well to replenish the oil reserves that they've been dumping into the market. So I have a strong feeling that our next CPI may not be what we hope it's going to be, because the one thing, again, that drove those costs down may be what's driving it back up. Chicken is up 33%, eggs up 82%, and we've even seen milk up 18% from this time last year. So a lot of our staples are still going up. And what that's showing us is inflation is stickier than we'd hoped. They kept calling it transitory, like it was going to be this short time and it was going to go away, and it's hanging around a lot longer than we thought. Before CPI, there was a 60% chance that the next Fed rate hike that's coming on Tuesday was going to be 0.5%, and now that's flipped, and we're looking at a 60 to 70% chance that they're going to raise it 0.75, and so now the full 0.1% rate hike is even on the table. Now let's talk housing a little bit. Housing costs are gone down about 5% since March, about 15% since this time last year, but purchasing power is still down 35%. We're looking at mortgage rates starting to climb above 6%. And I think we could see it go even higher, touch 7, maybe even 8% before this is all over. And this is just my opinion, but I don't think we're going to see that come down, hit 5 or below till late 2024, potentially even 2025. We're going to see kind of a stagnant interest rate high, but we're also going to see prices come down, but I don't think prices are going to really start coming down till late 23 or even early 24. And so some of that causing prices to go down is because that high interest rate is a lot of people that were refinancing in the past 2 years are looking at a 2 to 3% interest rate on their current loan, and they're not wanting to buy a house at over 6%. And no one's definitely going to be refinancing anytime soon. Now, the markets this week, the S&P 500 fell almost 5%, and the NASDAQ fell almost 5.5% this week. So we saw a big drop on Tuesday, and we saw another big drop towards the end of the week, and it finished up a little bit higher right at the end of the day on Friday. We saw some big losers like FedEx drop 23%. We looked at Amazon dropping over 7% and Apple dropping over 4% just this week. Now, a revised estimate of a Social Security cost of living came out this week as well. They're looking at an 8.7%, which is a full percent down from the previous month's estimate. Now, there's one more CPI report that comes out before they give the official, but this would be one of the highest cost of living increases that we've seen in Social Security, which is pumping more federal funds into the market, which could increase inflation a little more. Number one thing I recommend is cutting costs where you can. For one, every time we're cutting costs and we're not spending money, that has helped driving inflation down. The more we spend, the more inflation goes up. So that is something we can do ourselves, is find where you can cut costs, save money, and that's going to be a big part of it. Now, as you're cutting costs and you're saving money, if you have debt, pay off that debt. Use that debt snowball and get out of debt so you can save as much as you can. The best thing you can be doing right now is dollar cost average into the market. It may not feel comfortable buying something today. I bought stocks this week. You take a little bit every month, every other week, and you slowly dollar cost average, because it's so hard to try to pick the bottom. You're probably going to miss it. And if you slowly dollar cost average, that is going to give you the best opportunity to have the best rate of return. Best thing you can do, don't panic. Focus on what you can impact in your own life and focus on that. I hope you guys will continue to watch these. Please like, subscribe, hit that notification bell. Please leave some comments and let me know what you want to see, what you may want to review. What are some things that you guys want to know more about that can continue to help you guys save as much as possible. And I hope you guys will continue to be smart, simple savers.